Palantir took a real hit today, dropping nearly 9% in regular trading and slipping further in the after hours. The stock closed at about 15,775, and that means it shed roughly 16.5% in just the last 5 trading days. It's a dramatic swing, especially for a company that recently looked unstoppable. So what's behind this sudden slide? First up, we've got a wave of profit-taking. Palantir has been on fire all year, up well over 100%, even 400% over the last 12 months. It spent much of that time climbing on bullish sentiment, AI enthusiasm, and big earnings beats. But when a stock rallies like this, some holders are going to lock in gains, and that cascade can trigger sharp pullbacks. Then there's the valuation story. Almost no one's denying Palantir's growth or the strength of its platform. But the multiples, wow, eclipsed most of Wall Street's expectations. Forward PE ratios in the 200+ range, enterprise value to sales north of 100 times. That's just unsustainable unless growth remains perfect quarter after quarter. That's exactly what Citi, Goldman, even UBS have warned about. They have applauded the execution, but remind investors that the valuation pressure will keep building if growth or execution falters even slightly. And Andrew Left from Citron Research pulled no punches, calling Palantir disconnected from fundamentals, and suggesting fair value as low as $40 based on software comps. That kind of commentary, from a noted short seller, definitely adds to the selling pressure. Naturally, the broader AI and tech environment isn't helping either. Today, the Nasdaq shed about 1.5%. Tech-heavy matches like Nvidia were also down. That came alongside headlines about fading confidence in generative AI, like an MIT study saying 95% of companies haven't seen real returns on their AI investments. On top of that, the OpenAI CEO himself cautioned that the hype could be nearing bubble territory. If sentiment shifts, momentum names like Palantir get hit first. Still, it's not all doom. Some of today's selling is clearly short-term and technical. The fact that Palantir held above support levels around 150 to 160 is meaningful. Core holders and institutions aren't giving up on the company's long-term thesis, AI demand, government contracts, and a track record of strong earnings. Plus, it's worth noting that Palantir isn't just an AI darling, it's a contract powerhouse. Government and defense spend remains strong, and they've locked in several multi-year deals. Their AIP platform is expanding across enterprise verticals. That foundation doesn't vanish after a single correction. Profit-taking today may be a buying opportunity for long-term believers who believe in the fundamentals. If we zoom out, the market is clearly recalibrating. Today's move is a reminder that you don't need new negative headlines or earnings misses to trigger volatility. Sometimes it's enough that expectations are elevated. And on high flyers like Palantir, corrections can be sharp. Historically, post-earnings swings of 10 to 20% are not uncommon. So where do we go from here? First, the reaction tomorrow and Wednesday will be telling. If selling persists and volume stays high, that signals a fresh wave of profit-taking or investor fatigue. But if the dip stabilizes, or if a few high-profile buys or analyst notes surface, we could see a rebound toward the 160 to 170 range. Also important, Fed signals and macro data. Tech remains fragile during rate hike uncertainty. Any dovish shifts could rally growth names. Any hawkish tone will add to heat on richly valued stocks. We should also watch for statements or earnings previews from Palantir or institutional investors. If managers push back on valuation concerns or reaffirm confidence in AI adoption, that could change the narrative. Likewise, if short interest headlines fade or we see options activity skew toward calls, that could signal growing bullishness at the margin. To summarize, Palantir's recent drop reflects a perfect storm of profit-taking, valuation re-evaluation, broader AI skepticism, and tech rotation. But the fundamentals remain intact: contracts, products, growing enterprise adoption, and strong cash flow. The key now is where this pricing pressure resolves. Is this a top-forming, or just a temporary pause before the next leg up? If you're short-term focused, you may sit tight or even trim a bit here. But if you're long-term, today's pullback could offer a better entry, assuming you believe in the future of AI and Palantir's unique positioning in that world. Thanks for tuning in. Drop a comment. Are you buying this dip? Watching for stabilization? Or do you think the write-down has more to go? I'll be watching with you.